Nvidia, computer infrastructure company which provides graphics, computer networking solutions, just announced its third quarter financial results, and the stock price rose 5% in the after-hours trading. To get a better understanding of the company's size, let's look at some of its metrics. Market capitalization is $4.8 trillion with a stock price of 196, which appreciated 34% in the past year. For the trailing 12 months, revenue is 187 billion and it grew 65% year over year. Profit is 99 billion with a profit margin of 53% and free cash flow is at 77 billion with a free cash flow margin of 41%. Company is huge but still grows very fast and the profit margins are massive. Let's take a look at what happened this quarter and why the stock price rose 5%. With 57 billion of sales this quarter, Nvidia beat its own revenue guidance by 3 billion. Margins and costs were also intact to guidance. Additionally, Nvidia's revenue guidance for the next quarter is 65 billion with even higher 75% gross profit margin. This quarter, Nvidia announced new investments. 5 billion investment into Intel is awaiting its final approvals from regulatory bodies. They are also in negotiations with Anthropic with intent to invest up to 10 billion. And Nvidia also announced that it's considering investment into OpenAI. However, this part is not certain. Size of the investment consideration wasn't revealed as well. Data center segment is responsible for around 90% of Nvidia sales. Nvidia is becoming more and more sure that they have been pushed out of data center segment in China, which has to do with USA-China trade war. China is a huge market, but sales in the USA are so far compensating for the loss of China market. Let's take a step back from the current quarter and have a wider look on how company is doing by inspecting some of its metrics. Return on invested capital and return on equity are second to none. Nvidia is employing capital very efficiently and generates huge returns to its shareholders. ROE can be inflated by having a high debt level, but if we look at interest-bearing debt-to-equity ratio, we can see that the value is very low and it has been declining. Current and quick ratios show great liquidity. Nvidia wouldn't have any problems to meet its short-term obligations. Operating cash flow and free cash flow generation is lower than net income. Ideally, we would like those numbers to match. In Nvidia's case, lower cash generation is not necessarily bad. It's influenced by higher inventory levels, but company doesn't seem to have problems with demand. And secondly, its receivables have been rising. There are no current cautions of insolvent clients, but this is the metric that I would like to keep an eye on just in case. Moving on to reinvestments into the business, it's nice that company doesn't need to reinvest a lot to keep growing revenue. However, this might change with the current geopolitical risk and potential future plans to manufacture products themselves in the USA. More free cash flow allows Nvidia to return capital to its shareholders via stock buybacks. In the first 9 months of this fiscal year, Nvidia spent around 37 billion for share repurchases, with an average price of $140 per share. Company also pays dividend, but it's negligible. We can take a look at price ratios and they are very high. The only ones worth mentioning in Nvidia's case are price to earnings and price to free cash flow ratios. PE ratio is at 48.5, which is lower than Nvidia's long-term averages, but still pretty high. Many things need to go right in the future to sustain such a PE value. Price is 62 times higher than their annual free cash flow. We can see that the ratio is even higher than the 3-year and 10-year averages. However, lower than the 5-year average. To conclude, I will say the obvious. Nvidia stock is not cheap and there are uncertainties looking forward, especially geopolitical risk and unpredictable decisions by Trump regarding tariffs, which have caused damage to Nvidia in the past and may cause damage in the future. There are also intensifying talks on data center demand. Is this a bubble, and if so, will the investment plans by the big tech companies materialize? I guess we shall see, but one cannot ignore the rising revenue and massive profits generated by Nvidia, which makes me lean towards a bullish opinion. Thanks for watching. If you found this analysis useful and if you're looking for potential investment ideas, subscribe to my channel to see more. Like the video and comment below what's your opinion about Nvidia. I'm Aurimas and I see you in the next one.